Good afternoon, everyone. Welcome to another one of our Wednesday market reviews. We're going to be doing this every Wednesday from about 12:30 to 1:30 p.m. If you like what you see, you can follow me at StockDarts on Twitter, same name on YouTube, or you could go visit us at patreon.com/StockDarts, where you can find some weekly trade ideas that I post up, usually on Mondays or Tuesdays, followed by a recap of our Wednesday market review. I usually put the recording up there as well, if you're not watching this on Twitch, if for whatever reason you find this on YouTube or something. Other than that, let's go ahead and get started. Let's take a look at the S&P 500 with a look at the chart of the SPY ETF. And as we can see, we've had a pretty good week since last Thursday or so. The market has done some pretty good things, and we've been able to break through a pretty important technical barrier. And I think all systems are go for the market as far as making its way back up towards all-time highs and very likely beyond them. We're going to, as usual, we're going to look at the four major market ETFs first. We're going to look at the S&P 500, we're going to look at the NASDAQ, the Dow Jones, and the Russell 2000. Then we'll take a quick look at the US dollar, look at oil, gold, silver, see how they're behaving, and then from there we'll move on to chart requests. We just had a few people stop by. If you guys have chart requests, feel free to put them into the stream chat, and we'll get to them as soon as we cover the broad markets. Let me just type it out real quick. Alright, so as I said before, we did a good job with in the markets as far as being able to break out of what was becoming a little bit of a dangerous area. Over the course of August and the beginning of September, we were trading in a pretty nice consolidation range. You can see here pretty clearly a range between about 293 to about 283 on the S&P 500. And of course the threat was that if we resolved to the downside, we were going to start pushing even further down and start threatening some important areas from earlier in the year, specifically this pivot point that we printed back in June, which was the last time we really had a strong retracement this year. And we of course were able to resolve past that one and go all the way up to new all-time highs. And then this recent pullback, people were starting to get a little bit worried. And if we were to resolve lower off of this consolidation phase, then there was a chance that we came down and threatened that, at which point the entire direction of the year could have been in jeopardy, because it could have been that we would have ended up breaking below that, at which point then we would have headed down towards the bottom of the range we spent the last couple of years in. However, we had a nice strong move last Thursday. We were able to break pretty quickly over the 50-pair moving average and over this 293 area. And then what we've done over the last 3 or 4 days is basically print a bull flag, which we are trying to break past today. All in all, this is exactly what you'd want to see if you're looking for all-time highs. And I would expect us to start pushing towards all-time highs through the rest of this week and into the beginning of next week. There's really nothing left here to say that we aren't ready to move forward. So overall, I think we're at a spot now where we want to be a little bit more aggressive, trading to the long side. Now, the market already did move, but we've had a nice consolidation range over the last 2 or 3 days. Now, the one issue I am having with this market right now is that despite the fact that the overall market ETFs are printing pretty bullish patterns, there has been a pretty big disparity when you go underneath the surface and just look at individual charts that are not really behaving the same way. As I went through my watch list on Monday and Tuesday looking for different names to trade or different names to recommend to trade, I noticed that there were a lot of charts that were up significantly or down significantly, while the market was just sort of up moderately. And that's kind of an interesting mix, because typically when the market is up moderately, you just have a lot of stocks that are up the same. And what we had in this particular case were plenty of stocks that were outperforming the market and plenty of stocks that were certainly underperforming the market, which tends to be the type of behavior you see during a choppy market, which is what we've had for the last month. So it's not really overall surprising, but it does make it a little bit harder to find good trades, because you still want good setups. You still, despite the fact that I think the market's heading to all-time highs now, That doesn't mean that I'm going to throw caution to the wind and just pick any name I want. I'm still going to have to look for names that I find with good probabilities as far as the risk reward, as far as the pattern that's printing, as far as the the timing of it. I'm not going to just chase something that's been up 3 or 4 days in a row. Um, Vice versa, I'm not going to just buy something because it's down 4 days in a row thinking it's going to bounce, right? You still want to find charts that are emerging from nice patterns of consolidation, or printing candle patterns at areas that you consider to be important. So I do think we can be more aggressive, and I think that the market definitely wants to head higher, but we still want to respect whatever rules we have in place for our trading. We still want to be disciplined because we aren't really out of the woods as far as trading in a choppy market. If we just sort of step back for a second and take a look at the weekly chart and where we've been over the course of the last year and a half, 2 years now, you can see that the market's been sideways. Despite the fact that we've had very strong trends on the intermediate term back and forth through this broad range, we've basically traded sideways. But that being said, we had a strong uptrend, a strong downtrend, strong uptrend, strong downtrend, strong uptrend, and then now we've been sort of just building up steam as we consolidate in the upper edges of that big horizontal range. And again, this is all positive. This is actually pretty bullish the way it's been behaving, because you'll notice that we're not pulling back to the bottom of the range anymore. We're just pulling back to these lower and lower, higher and higher areas as we build up more momentum to break through. I think the fact that we're back above 293 is very critical. You'll notice that was basically the ceiling of the range that we spent the last couple of years in on the S&P 500. It was what kind of held us back last year, last summer, and then again this year in around April and May. And we're back above it and consolidating and trying to hold above it. And as long as we do that, I think we're ready to really push forward and start exploring much higher in the markets. Now, there has been a couple of drags that have been kind of holding us back from doing that. One of them is the small caps in IWM. We'll get to them shortly, but they've actually been performing pretty well, which is helping, I think, overall the chances of this market being able to finally start emerging through here and pushing even further forward. Now, going back to the daily chart, as I said before, what we have right now is we have a nice little bull flag here, and we're breaking above it today, which, as I said before, probably means that we're ready to push towards all-time highs, which are not that far away. It's only about 2.5 points away. And I suspect that we're going to try to push to that area tomorrow or Friday, and possibly even try to push past that on Monday of next week. And I think, again, as long as we're moving forward in that direction, we should basically trade to the long side and take advantage of this momentum. Now, what are some levels we could watch, particularly if you're still nervous about this market and you're not really sure where it's going, and you still think that there's a chance for downside? Well, I think at this point it's pretty clear that as long as the market holds above this area here, then there's no reason for you to be worried, right? Even if we fail this particular breakout that we have today off of the bull flag, and we trade all the way back down, even if we sell off for the next 3 days, as long as the market holds above 293 to 294, then you have to treat this as bullish. And you should not be worried about what the market's doing as long as we stay above that level. Now, if we fall back below that level, then you can, a little bit of caution is warranted, because that means that we likely failed in breaking through that level, which means we probably need to come back down and test some of these lower areas. But again, that right now is not my concern. My concern right now is how long does it take us to push to new all-time highs? I think that's where we're headed, and I think that's where the market's going. And it's just a matter of taking advantage of that momentum and finding stocks that have not already taken off and are giving us poor risk reward. I think that's always the issue. I think sometimes when you have a market like this, is if you weren't really quick to react off of the initial move, then you need to be patient and wait for the right opportunities. Now, we did have a good opportunity yesterday and today, because again, the market has consolidated, at least as far as the S&P 500 and the NASDAQ are concerned. The market has sort of paused a bit. As we move forward, you'll see some of the other indices have kind of continued relentlessly climbing and have given people maybe a little bit harder time to sort of time their trades and get in. But as far as the S&P 500 is concerned, there was a nice 2 or 3 day consolidation off of that initial move through 294, and gave traders a chance to possibly get in on names that were lagging a little bit behind or a little bit ahead and then consolidated. But again, just to sort of reiterate, as long as we're above 293, 294, you should not be worried about this market. You should not be worried about any kind of a pullback. I think that as long as we're above that level, again, step back and take a look at the weekly chart and keep an eye on that. As long as we're above that, we're above basically all of the trading range from the last couple of years. And of course, really above all the price action that's ever been taking place on the S&P 500. The only thing that's really above us is this temporary surge that we had, in July. And other than that, we're holding above pretty much everything else. So overall, it's very, very bullish, despite the fact that I don't get that sense from a lot of traders when I'm talking to them or when I'm seeing traders on social media, or even when you watch on TV on CNN. You don't get the impression, or at least I don't, that people are looking at this market with the idea that it's the most bullish market that maybe we've ever been in. And we're really right back up towards the top edge of it again, and it almost looks like we're threatening to really start moving forward and past that range again. Now, again, I think for now, I'm more interested in heading up towards the highs rather than blowing past them and starting a new really strong rally again. I hate to keep harping back and going back to this weekly chart, but if we sort of step back a bit and we take a look at what's occurred over the last 4 or 5 years now, you can see that back in 2015, 2016, 2017, we did something very similar to what we've done over the last couple of years, which is we traded sideways, and then eventually we had a move past that range, and then we spent a good chunk of time, maybe 4 months, trading above it and kind of just holding and consolidating and confirming that breakout before we had the massive rally. That is what we're trying to do again. We tried to do that back in July, and we sort of failed and came back inside of the range, but we're right back above it again. And it just looks like it's at the same process of trying to confirm a breakout past that range before we could start another major rally, like what we had at the end of 2016 and through most of 2017. And it looks like that's what the market's trying to set up to do again. I don't think we're quite ready yet to really take off, but I'm starting to see signs that shows that the market is starting to gear up for a move of that nature. And I think the first part of it is to push back towards all-time highs and start to hover around them and not to get smacked down sharply by it. I think that's the key right now. I suspect that we are going to hit all-time highs very quickly. My concern right now is once we hit those all-time highs, how do we react? Do we find a lot more supply and a lot more selling like we did just in the end of July and beginning of August, where we kind of shot down quickly and actually scared a lot of traders despite the fact that it really wasn't that major of a move? Or do we kind of take the supply a little bit easier and just sort of consolidate and hold above 293 and then start to resume our way up? Or do we just blow past it, right? I think as long as we hold above 293, any of the other scenarios is bullish. So that's really the key, is we'll just watch what happens around 293, 294. As long as we hold above that, we have to treat the price action as bullish despite whatever kind of red candles we may get around the 300 to 301 level. And I think that's really the key right now, is to see how we navigate these all-time highs and what we want to do if we're trading. I'm still trading mostly range-bound strategies. For those that maybe aren't aware, we didn't meet last Wednesday, but the Wednesday before that and basically the last several Wednesdays, I've been advancing the idea of trading with range-bound strategies, selling premium, buying value at the bottom of a range, not necessarily playing breakouts. I think right now we can start looking more at breakouts because that's what the market's starting to do. But I'm still selling calls at the top of ranges, and I'm still looking at probably selling calls at the top of the ranges once the markets start to hit their all-time highs. So I think there's still a more likely chance that we stall around that level rather than really blow past it. So that's still my stance, but I am watching closely, and I'm willing to change if I start to see us really push past these all-time highs and start to climb quickly forward through that. Now, what if you miss this and you kind of get antsy and you want to go ahead and start getting more trades up to the long side, but you don't want to chase? there's a couple of things you could do, right? Now, again, it's a little bit tougher because really it should have been done a couple of days ago, but you can wait. There's a couple different scenarios that could play out that could give you better risk reward. The first is if we kind of pull back into this bull flag again, at which point you could look for a better move and then play off of that. Now, it could be something that takes a while, right? Let's say for whatever reason we sell off over the next few days and come back. You could look at this 294 as an area that you want to go ahead and buy. I don't think this is a likely scenario at the moment. I think that we will more likely than not attempt to go up first. But there are another couple different scenarios in play if that happens, which is likely to happen. The first is that we stall out right at all-time highs and we come back and we sort of pull back. In that scenario, you could wait for whatever the next pivot is, and you have to hope that we basically are forming now a pattern where we have, and you can see this has happened for quite a bit now, right? We had each pullback has led to a higher pivot low, right? So what you would hope is that the next pivot is something like that, and you continue to play this pattern upwards as we have these little pullbacks into these areas of support. And it could be one of the moving averages as they catch up to price action, or it could just be based off of, say, this 298 level that we are now breaking past. That might become the next level of support once we're fully through there, right? So you just have to follow this pattern and play off of that rather than trying to chase price action into highs. Because again, we're getting pretty close to all-time highs. There's a pretty good chance that there's some stiff resistance there. Now, the other scenario is if we do push past it strongly, well then it's still the same idea. But what you do is you hope that we come back and retest those highs and hold above it, at which point that becomes a really good spot to go ahead and get involved in a little bit of a safer manner than trying to just play the breakout through highs on a market that maybe starts to get a bit overextended. And so that would be the plan of attack right now. If for whatever reason you're under involved in this market, or you're worried that you want to have more in, but you don't really want to chase the price action, you can always be patient. There's the market, it's always open, right? So you don't have to feel like you're being forced into chasing the price action. That's usually how you get in trouble. Is this idea, the fear of missing out and the fear that the market's leaving you behind. Don't worry. The market ebbs and flows. There's always a back and forth, and you'll get another opportunity if for whatever reason you feel like you missed this last move upwards. We're still going to come up into some pretty stiff resistance areas, and while I do like the bullishness of the market, I will say at the moment the upside left is limited until we are clearly through these all-time highs. So it's not like it's the end of the world if for whatever reason you're still under involved. Let's wait to see what happens at these all-time highs before we really make any big judgments on where the next move in the market is. However, I will say that again, I am pretty bullish right now. I do like what we've seen. I like the fact that we emerged out of this consolidation range to the upside, and we were able to not have to challenge these pivot lows from back in May. I think that was a really critical technical sort of development in the overall markets, and I like what I'm seeing there. Now, if we look at the NASDAQ and we look at the Qs, you'll see again, very similar, almost identical to the S&P 500. We had the breakout. We had the 2 or 3 day consolidation. Yesterday's hammer was a really nice buying opportunity for anyone that took advantage, whether it was at the close or today in the morning. And the NASDAQ is lagging slightly, right? You can see it hasn't quite broken out of this bull flag yet, although it's kind of inching up towards it. However, same as the S&P 500, I think a move towards these all-time highs is imminent. It's only 3 points away. With the action that we're seeing, I think that's more likely than not going to happen. The fact that we were able to break again above this consolidation range that we spent a good month and a half trading in and threatening to kind of head lower, the fact that we were able to continually climb upwards and eventually break through, this is all pretty textbook as far as bullish continuation and sort of resuming the trend higher. You can see the 20-period moving average curling right back up. We're back above both moving averages, the 50 and the 20, and of course the 200. And everything here is bullish. There's nothing negative about this chart. And for anyone, again, that's worried about this market or still hesitant and doesn't think we're really ready to push onwards, well, just keep an eye on this 189 to 188 area. As long as we stay above there, there's nothing really negative you can say about the market. Now, again, upside is maybe limited until we're able to push past these all-time highs. We only have 2 or 3 points to get there. So you might not want to get too aggressive to the long side because, again, the risk reward's not that fantastic right now. If you were just looking at the Qs and you're looking to trade, even if we use this 189 as a line in the sand, that's 3 points of downside for 3 points of upside. So as far as trading opportunities are concerned, really the risk reward's not here for us to kind of get aggressive. However, there might be other names that we're watching that give us better risk reward than this, that maybe are trying to play catch up, or are just have shown relative strength to begin with and are in better spots. So what we have to do again is dig through and look for names that give us better risk reward than the markets. But I think the markets at the very least are showing us that they are kind of regaining the strength that was sort of in doubt through most of August. And as long as we continue to hold above this price point and continue to just sort of repeatedly challenge these all-time highs, I think overall there's really nothing negative we could say. Now, other technical levels on the NASDAQ that we could concern ourselves with, if we, for whatever reason, lost this 188 to 189 level, that's not good, right? Because that means that we're heading right back into this range, which means more likely than not we're going to test the bottom of that range. And while it has been sort of ascending, there's a decent chance that if we fail and come right back down, we're likely going to break through the bottom of that range and test all the way down to maybe 177, 178. Now, that is not a likely scenario at the moment, but it is something we should keep in mind in case something happens, something comes out of left field and really spooks the market. And if that's the case, then those are the levels we want to watch. Now, if we continue to climb upwards, well, then clearly the only other level to watch is 195.20, besides these really short-term 192 and then 189, which of course is our line in the sand, at least in the short term. This right now is the key area. As long as we hold above that, we're looking good. Matter of fact, I'm going to let's do this. I'm going to color that green. As long as we're above that, all systems are go. Let's go back real quick to the S&P 500. Do the same thing. Alright, so as long as we're above those levels, really, we shouldn't be overall concerned with what's going on. And really, there's nothing else I can add to this. I think overall, the NASDAQ is doing pretty well. I think if we take a quick aside and take a look at some of the FANG names, you can see that they are in a different place, and there's still a little bit of a wide disparity here between how they're performing compared to the Qs in general. You can see Facebook's still struggling a bit. It is possibly setting up a move here to maybe kind of catch up to the markets. This actually doesn't look too shabby, although it still has to clear a pretty critical area here around 189. The key one, of course, Apple. They had the event yesterday. They've been doing pretty well over the course of the last month and a half, and are pushing through to new highs. And this is a very nice pattern out of Apple, and overall they're doing great as far as the FANG stocks are concerned. If we look at Amazon again, a little bit like Facebook, trying to set up for a move outside of this range. So they're still trying to bottom, not quite in the same place. And this is kind of what I was mentioning at the open. I'm not sure if maybe some of you guys weren't here quite at the open, but one thing I've noticed is this: despite the fact that the market itself looks good, if you look at the broad market indices, underneath the surface, there's still a lot of names that are sort of not doing quite the same thing. And it's kind of interesting that if we just look at these FANG stocks, a lot of them aren't quite in the same place as the market. Look at Netflix and where it is right now, trying to reverse this downtrend that's really it's been stuck in since its earnings, and continues to sort of get knocked down and trade lower. And then Google, and you notice that really Apple is the only one that's trading like the markets. The rest of them are in a little bit of a different spot. Now Google is a little bit stronger, relatively speaking, than what we're seeing out of Amazon and Facebook. You can see that they actually did break through this sort of this sort of pattern that was sort of similar to the market, this ascending triangle. And they're actually moving forward and trying to make their way back up towards recent highs. But just looking at the four FANG stocks, right, or the five, and you compare them to the Nasdaq, and you can see that most of them are actually lagging a bit compared to what we're seeing there. And that's kind of the issue with the market right now, is that despite the fact that the overall indices are holding up pretty well, you know, underneath the surface there is still a little bit of weakness, and well, more than anything, I think variance, because there are other names that are outperforming the markets and are looking even better. So I think that's kind of the key issue here, is that we still want to look around and pick good names. We're not in one of these massive bull markets like we saw in 2017 or what we saw in 2013, where pretty much everything went straight up. We're still in a spot where you need to kind of pick the right areas and you need to follow relative strength. Wes, do I have thoughts on holding Intel and Activision? I'm going to take a look at both of those when we get to the chart requests, and I'll let you know what I think. I like, just off the top of my head, I do like Activision. I like what I'm seeing out of that, and I think that it can go higher based off of what I'm seeing with their new Call of Duty game, which is coming out soon. But we'll get to that in a second. And by the way, Wes, good to see you here. Glad you found me on here on Twitch. I'm hoping the rest of you that are in here are enjoying the new platform. It feels like this might be better than what we had before with GoToWebinar and certainly with Ticker TV. So hopefully you guys are liking the new place. But we'll get to those shortly, Wes. But so overall, the Nasdaq is doing well. But as you can see, just looking at the FANG stocks, not everything is trading in unison with the overall markets, and so that's something we have to pay attention to. And sort of make sure that we're still doing our due diligence and looking for the right names to trade. Now, as we move on to the Dow Jones, you'll notice that the Dow Jones has, relatively speaking, been a little bit stronger over the last few days. Unlike the other three that sort of printed a bull flag, this one, I mean, technically it's still kind of a bull flag, but it's one of these ascending little channels that are more difficult to trade. So you can see that the Dow Jones has sort of started climbing, and not really pausing like the other three. I mean, we did sort of trade sideways, but it was printing new highs pretty much every day. So there's a small show of relative strength here. I don't think it's anything major. I don't think it's anything. It might just be because less names. You know, there's less components in the Dow Jones, so something like Apple might just push it higher up than maybe some of the other names. But overall, it's sort of making its way upwards. Other than that, though, other than the fact that its last 4 days have been up instead of sideways, it's doing the same thing, right? We had this consolidation range, which was decidedly more neutral than the other two, as you can see by the lower edge being horizontal instead of sort of climbing upwards. It was basically trading sideways. We were able to break past this 265, so we're going to do the same thing. As long as we're above that, nothing to worry about. As long as we hold above 266, again, go back to the weekly chart, and we're above a major price point, right? You can see on the Dow Jones in particular, 265 has been critical all the way back in January of 18, then way back here in September of 18, and then over here, April of this year, it's been the ceiling. And earlier, you know, in July and early August, we tried to break past that, and we failed. But we're right back above this 266. As long as we were 265, as long as we hold above that, it's bullish. It's strong. It shows that we're trying to push past this range, and the fact that we were able to quickly get back up here after failing from new highs is a sign that the bulls are still trying to push this upwards and are still believing in the market, despite what you might see on Twitter or on CNN. The price action is telling us that the market wants to try to push back to highs. All-time highs are not that far away, maybe 3 points again, just like the other indices. Now, short-term resistance again is not that far away, 3 or 4 points. So, risk-reward, not that great for upside that's limited. So it's still not a great idea to get overly aggressive to the long side. But I think that we do need to be trading to the long side and getting involved on names that give us good risk-reward. Other than that, again, the levels are the same. We've got all-time highs, we've got this line in the sand, and then if we fall below that, We've got the critical area around 255, but other than that, it's pretty much the same. And then finally, we have IWM, which I think is the big difference here. You can see the strength in IWM, particularly in the last 3 days. Basically, this week, Monday, Tuesday, Wednesday, really shooting higher. This was actually kind of important. If there was one index that was really threatening to make a scene, and have the markets kind of in real jeopardy, it was the small caps, and it was IWM. Just a couple of weeks ago, we were threatening to break down below our range. So all three other indices are trading above all-time highs, or right around all-time highs, and trading above the range that we spent the last couple of years in. Well, the small caps were threatening to break the bottom of that range just a couple of weeks ago, which is, of course, not a good look, right? That's pretty ugly, and that shows that traders are still pretty hesitant about this market. And despite the fact that we are continually pushing higher, there is underneath the surface this sort of skittishness and this sort of fearful behavior that is kind of on display whenever you look at IWM and you look at the small caps, where we are not really outperforming in the volatile assets, which are typically the ones that do well when the market is really bullish. So we have that to still worry about. But at least in the last 3 or 4 days, we've had money flowing into here. And we're able to really push past that bottom, which is kind of important because even if the market wants to push higher, if the small caps are pushing or going lower, we're not going to really be able to have a strong rally. As it is, I think that we're still not really ready to have a strong rally based off of where the small caps are right now. I think the critical area for us is to break past 158 to 159. If the small caps can get above that, then I think it's all systems go, and I think the markets are going to rally past all-time highs and continue to push upwards. Until then, I think that we're still just sort of holding above around our highs and trying to build up steam for that eventual breakout. So if you're looking at where we can find some resistance, of course the other three indices, it's basically at highs, but I think more importantly for the small caps, it's this 158 area, and I think this is going to become an important area for us to try to push past if we want to see a strong rally in the markets. It's not to say that the other three indices can't make new highs while IWM is below 158, but it's probably just going to be a nominal move to just sort of explore a bit higher and then pull back. I don't think it's going to be a strong rally unless we could see IWM push past that level. That has been kind of an important area for a while now. Basically through all of 2019, you can see that each time we've gotten there, we've gotten knocked down pretty good. And until we can clear that area, I think that's one of the big issues that we need to sort of switch this the switch in the market and get a little bit more of a bullish nature, a little bit more of a bullish character, is for the small caps to really start to explore a bit higher and kind of reclaim a lot of this vacuum here that we haven't really explored all year. And really since last year when the markets really fell apart, IWM has not come back and sort of tested that area. And I think that's what we need. I think we need to break 158 and then have IWM try to play catch-up. And if that happens, then I think we're going to see a strong move out of the rest of the markets. But until we get IWM above that, I suspect that the markets are going to stall out around all-time highs and probably push a little bit past them, but not enough to really to equate it to a strong rally. More along the lines of just sort of exploring and seeing exactly where the sellers are. And so I think that's the critical area. Now, do we have a line in the sand like the other three with the small caps that I could just put as where to worry? I don't think so. I think with the small caps, if we do pull back, I mean, we don't want to lose this 150, but really as long as we hold above this 145 to 146, I think we're okay. At this point the market is used to the small caps underperforming. We're used to the small caps not really participating quite the same strength as the other indices. So I don't want to sit there and say there's a line in the sand with the small caps. Really, the line in the sand is way down here, and that's basically the bottom of the range we spent the last couple of years in. So more than anything, we just want to see it try to push upwards and try to be more productive and more constructive as far as building a bullish pressure for the rest of the markets to continue. And I think that's the key. It'd be nice to see us rally all the way up to 158 from here to Friday. I don't think it'll happen. It might, but more likely than not, we'll stall out a bit before and hopefully just print a bull flag and then try to make another run for that as the markets try to push upwards through their highs. And I think that's one of the things that I want to really see is that 158. If we get that, then I think I'm going to be fully on board with getting really aggressive to the long side. But until then, I think we still want to be a little bit patient. We still want to look at making sure that we are disciplined in our approach to trading. Now, one last thought before we move on to the US dollar and then into the chart request is, if we're looking at relative strength, should you be looking for small caps right now? And I'm still kind of on the fence about that. I think at the moment, the small caps are likely to be overextended. Depending on how they consolidate and what kind of patterns they form, it might be worth looking for small caps to trade to the long side on the next impetus up. That might be something that I'll explore in a little bit more detail later this week or probably on Monday. But for now, I'm still just kind of going through all four indices rather than focusing on one. While we've had nice relative strength over the last 3 days, this might just be a 2 or 3 day aberration, and we might move back to the small caps underperforming. So I don't want to draw any larger conclusions than I need to right now. But I do like what I'm seeing, and I hope that this is a trend that can continue, and that we can continue to see strength emerge in the small caps as we start to try to rally in the markets. It's kind of a weird time. Usually September's not a spot when the markets rally strongly, but if we can get it, we'll take it whenever we can get it, right? So we'll keep an eye out and see what happens. But I think overall the conclusion I can draw from this is that I'm pretty happy with what I'm seeing out of the market. What I've seen over the last week, and I think that we've definitely flipped back to bullish from neutral, and now it's a matter of us being patient and making sure that we don't chase the price action higher, because if things develop the way that they that I'm hoping they do, then we'll have a pretty long amount of time to play on the bullish side. We're at the spot where this could be signaling an attempt at a longer term rally, and if that's the case, we'll have a lot that we can go ahead and play. A lot of time and a lot of opportunities to play to the long side. Now, that being said, we're not there yet, right? So that's why I'm still being cautious, is because there is a chance that we stall out at those highs again and then roll right back over, so that's why I think it's important that we see how we handle those highs over the next few days, and whether we find too many sellers or whether we continue to sort of build up pressure to try to break out and get even further up. All right, so let's take a quick look at the US dollar. We'll look at oil, gold, and silver, and then we'll get on to the chart request. If anyone besides Wes has a chart request, feel free to put it in there. We still have a good 20 a little bit, 20 or 22, 23 minutes. Should have plenty of time to look at some. So if anybody here has any other chart requests that you're looking at, feel free to let me know. Again, it doesn't have to be a chart that you're trading. It could be something that you're looking to enter, or like Wes, he's actually traded both of these and he's up and he's trying to figure out whether he should take profits or not. Anything that you want, just ask the question. It could even just be a question about a pattern. If you're not really sure what you're seeing on a stock, I'm more than happy to just have a discussion on any charts that you guys are looking at. That's kind of what I enjoy doing the most here, is going through and just looking at different charts and analyzing the price behavior on them. So here's the UUP index. Here's the US dollar as an aggregate. A nice little move up today. So the US dollar continues to behave well. It continues to act strongly. And for those of you that are hoping for lower interest rates, I think at the moment this chart is telling us that that's not really in the cards at the moment. The US dollar continues to rally and show strength. And what's interesting is that as we look at the different aggregates, they're not really trading in the same direction. Now, we have the euro. The euro is definitely struggling versus the US dollar, right? You can see it had a big breakdown. We discussed this potential a couple of weeks ago, and this was, for anyone that trades Forex, this was a really nice short opportunity once it failed again to hold above this 111. And they came back down and broke through these lows. It was a huge move. And again, it's failing again, right? So the euro continues to struggle versus the US dollar. It's losing a lot of ground. If we look at it on the weekly chart, you can see just what's happened. And again, this was a critical level, 113 to 114 that it failed. And then since then, it's been attempting to bottom out at 111, at 112 and then 111, and it's failing. Now it's all the way down to 110, and it's struggling with that as well. So overall, this is really the big reason for the UUP index surging strongly upwards is the weakness the euro has had. Now, for those that maybe aren't familiar with this, keep in mind this chart is the euro U.S. dollars, so it's priced in euros. That's why it's inversed, or why it's inverse. But so for this particular case, euro, down means good for the U.S. dollar, up means good for the euro, as opposed to the U.S. Canadian, which is the next one we're going to look at. And you can see in this case, the U.S. dollar actually struggled versus the Canadian. Now this has something to do with oil, which we'll get into in a second, because the U.S. Canadian is strongly correlated to, or inversely correlated to what oil does. And you can see that we actually had a pretty big breakdown. So a lot of the U.S. dollar strength is actually coming in from the euro weakness. And it's sort of a mixed bag when we take a look at something like the U.S. versus the Canadian. Now we are getting a potential bounce here. And this looks like a nice little bottoming pattern, the hammer, and then the nice bullish engulfing candle today. So there's a chance that the U.S. dollar tries to make its way back up to 132, 133. But from there, that should probably be a really strong area of resistance if it even gets there, at which point it probably flips again to bearish. And then the last cross we like to look at is the U.S. yen. And you can see here, the U.S. dollar, while it's been pretty weak, it has rallied over the last few days to break through a pretty nice area here around 106, which is a pretty bullish development. And in this particular case, what you're looking for, again, if you're a Forex trader, is you want a pullback maybe to the 50-pair moving average, and then from there you can go ahead and play it to the long side up to about 108. And so I think what we're seeing here again is the U.S. dollar is trying to gain strength in general, and that has affected gold and silver. You can see gold actually had a pretty strong pullback. Now gold it kind of is dipping back into this gap here, and I suspect we see a bounce soon. So if you're a gold or silver bull and you've been kind of wanting to get back into some of these big moves that it's had, I think that it's at a good support area, and I think this is where you want to start looking for potential buying opportunities when you see a good pattern develop. Same thing with silver. You can see again, we've got this gap here, and we're right back into it. We're developing, you can see that it was a pretty sharp move. I mean, that's a pretty drastic move down. But we're starting to see some support here. And there's a chance that it bounces, probably not all the way back up to 1850, but maybe up to 1730, 1750, maybe even all the way up to 1770 or so, if it could find some more support here. So these look like they're at support. Again, the U.S. dollar, if we go back and take a look at the euro U.S. dollar, it looks like it looks like the euro is trying to take a downturn again. But if it's able to stabilize here, and maybe hammer out another candle or two, another couple hammer candles, and try to break past that level, then that's going to give gold and silver the relief they need to really bounce back towards the upper edges of their ranges. If it continues to drag down, then it might take a while longer for gold and silver to move. But I've noticed that gold and silver, they are starting to move off of, they're not just inversely moving to the U.S. dollar. They are doing their own thing sometimes. So keep an eye on them and look for support on them, and see if they could get a bounce off of that. Now the last chart is oil. And oil finally was able to break through this downtrend. You can see all the moving averages just curled up here, and it was able to break past them all. Every time it tries to do something bullish, it fades it pretty quickly, right? So this was a very bullish move just a couple of days ago, but look at the quick sell-off over the last couple of days as it comes back and tests all the moving averages and this breakout point above maybe 55 or so. I think that this is a pretty good move, and there's a chance that it can continue to climb. Give me 1 second. All right, so as we can see, oil is setting up for a nice trend shift. We had the short-term trend that was bouncing or trying to climb higher. We had the intermediate term, which was taking oil down lower, and we finally had a pretty decisive break. However, it is the last couple of days it's fading that pretty quickly. But if it can find some support here and maintain this sort of uptrend, then I think we're getting a bullish change in oil, which could lead to oil names that are affected by this or correlated with this to move well with it. So that's what we're looking at here. And if it can maintain this breakout, great. If it fails this breakout, then it's heading all the way back down to probably about 50. So that's another thing to keep an eye on. If this ends up being a false breakout and it heads below this green trend line, there's a good chance it's going to come right down to 53 and then more likely than not all the way to 50, 51 to 50. So that's kind of a critical thing to keep an eye on as well. All right, so that's oil, gold, and silver. Let's go ahead and take a look at Wes's chart requests. The first one was Intel. So you're up 12 to 13% on both of these, right? So on Intel, you're up 12 to 13%. And what I would say on Intel is you probably want to take partial profits, at least partial profits, if not full profits on this. This is going to be a very significant area here. We're looking at some gaps to the downside. Well, look at this gap that needs to work on, right? That's a massive gap from 57 to 53. There's a good chance that there's going to be some very strong resistance up here at 53. I don't know how much you're holding, but if you're holding enough to sell covered calls on this, go ahead and cover it with 53 calls and take advantage of the upward move here, and maybe you could hold it for an attempt to push past that level. But I suspect that this gap won't really be challenged until its next earnings cycle, or its next earnings report, which is probably still quite a ways away. And that's a pretty good area of resistance coming up, and it's had a really nice move from 47 all the way to 52. That's a good catch, by the way, Wes. That's a really good trade on your part. It had this nice attempt at a bottom, and then it had the big move, and then since then it's just kind of climbed straight upwards. It probably has another day of upside. I think it's going to challenge 53, but I don't see much beyond 53 as far as potential is concerned on this. So this is one that I think that this probably has very limited upside. It might try to challenge into the gap, but I suspect that it's going to really struggle to make headway past 53 to 54. That looks like an area that it's going to need some time to really try to push past. So I'd probably be looking to take pretty good profits on it. Now again, if you're really bullish on this and you feel like it has more upside potential, then maybe keep a portion and try to trail it and see if you can get extra out of it. But I personally, this would have been my ultimate target on this trade. So I would probably be looking at that as a good spot to close the trade altogether, or again take a good amount of profits. Now, Activision, I really like what I was seeing out of Activision. I'm going to go to a little bit of a longer term chart on this. So if we look at Activision, and you look at the pattern it formed, this was a really nice bottom. And it actually was a really good signal for anyone that was looking at it. We had the attempted breakout that failed, and it came back, and then it kind of just continued to climb upwards, and then it had this nice little bull flag, right? And it was able to push past it. Now, it's up pretty good, right? And for any of you that are regulars or have followed me or know me or have known me the way I trade for the last 10 years or so, you'll know no matter how much I like a name or how matter good a stock is, when I get a big move up, I usually take partial profits. And I just continue to scale out of a name because I find that it's much easier to trade if you continually bank profits when the stock is up, so that if it does pull back, you feel more comfortable either adding more to it or taking a lower price on closing out the trade. So for instance, if you enter this at 50 and it comes all the way to 56 and you don't take any profits, and it comes down to 52, you're going to probably be very hesitant to take profits because you feel like you missed out on $4 of profit, right? But if you took partial profits at 56 and then it comes back, you'll feel a lot less. You feel a lot less conflicted about closing the trade because you know that you at least already booked some good profits. And matter of fact, you might even feel bold enough to go ahead and add because you feel like you already have a little bit of house money that you could play with. So I think it's okay to take partial profits here. I do think Call of Duty is going to add to this company's profits. Maybe those of you that don't pay attention to video games or don't pay attention to the industry as much, I actually do game quite a bit, and there's sort of a different vibe to Activision this year to their new Call of Duty release, and I think a lot of people are excited about it, and it's coming out in the next month, and I think that there's potential for it to continue to climb higher than this based off of the feedback that I'm seeing about the new game that's launching soon. So I think that there's a chance for this to actually continue to climb higher. But that being said, I think it would be irresponsible to not at least take some profits on this. Again, it doesn't have to be a lot, but at least scale out of a quarter or a third of the position, and then let yourself play with house money. Or if it does pull back, then you can go ahead and add. Now, again, if we kind of scale back a bit and take a look, you can see that there's. I'm going to just use this trend line here. A lot like Intel, there's a gap here that needs to be filled. I don't think the gap is quite as drastic as the Intel one, but this shows you that there's going to be a lot of overhead resistance here, right? So it makes sense to take some profits here. And it could be one of these things, sometimes it's by the time the game launches, it's a sell then use sort of a thing. So you don't want to be kind of caught with with nothing to show for it if this thing does pull back. But I do think that this thing tries to fill this gap in the next month or so. So I think that there's still upwards potential on this. Again, if you take a look at how much higher Activision can go, I don't think it comes up to those levels. I don't think it comes anywhere near the 70s until probably earnings, for the next quarter. But I think it has a good chance of trying to fill this gap in the next month or so. And a good thing will be how it fares once their new Call of Duty game is released. So I think this one has a little bit more potential upside, but if we're just trading off technicals and we're just looking at trading process, I still think it makes good sense to take profits here, at least on part of the trade, because I think that this is, again, anytime that you have an extended move up, and if you think about it, really, this thing has gone from 47 to 55 in the course of maybe 2.5, 3 weeks, right? Anytime you have that kind of a strong move, you're going to have a retracement. You're going to have a consolidation of it, right? So it makes sense that it already kind of sold off pretty strongly, both today and maybe, what was that, last Thursday, when it hit this. As soon as it came close to 56.60 or so, it faded pretty quickly. So you can tell there's a lot of supply here. There's a lot of selling pressure, and it might take a little bit more time to try to break past that. So it makes sense to take partial profits, but personally, if I traded Activision, which I did, this is a spot to take partial profits, but I'm looking for a move into ultimately, I'm looking for a move closer to 62 as my ultimate goal in this trade. And it may not get there. That might be optimistic, but that's what I'm looking for. But in the end, you have to still follow your own rules and figure out what to do next with it. But I would certainly take partial profits here, and then wait for the rest and hope that it can make its way back up there. All right, Wes, I hope that helps. I think you got a good entry on both of those. I think that both were pretty good trades, and nice job. All right, we got about 5 more minutes if anyone else is interested or has another chart they want to look at. I know there's a little bit of a delay between when I say this and when you guys hear it, but if anyone else has a chart request, feel free to add. Sure, Wes. I'll send that to you. Yeah, let me get it for you now. There you go. It's in the chat. For anyone else I think most of the viewers here are probably in the Discord chat to begin with, but that's a chat that we have mostly for futures traders, but I'm in there. Anyone ever has a question, you can always ask me on there. I'm always quick to answer. And you can always ask me stuff on Twitter as well, and I'm more than happy to answer there. All right, that covers it for today. If anyone else has any questions and I missed it, or you thought about it after we close shop here, again, you can follow me on Twitter. You can ask me on Twitter anytime you want. You can ask me on that Discord chat anytime you want. I'm more than happy to help out and give you guys any advice that you might be looking for. Other than that, I hope you guys have a good rest of this week, and we will meet again next Wednesday.